Joining us now is Paul Meeks. He's a portfolio manager for Independent Solutions Wealth Management and a finance professor at the Citadel. And I don't know, is it the ultimate buy on weakness stock for the last 20 years, Paul? Basically, I mean, do you think it should be bought today?
I don't think so because
No. Okay.
no. Here's the issue. This company has a June fiscal year, so we're halfway through fiscal 2023, and the street expects the company to earn about 950 this year. I don't quibble with that. What I quibble with, Joe, is in the next year, which is going to include 2 quarters from this calendar year, the street is expecting over $11, and I still think that's way too high.
The demise has been greatly exaggerated. That was my point over the years, and it was even, I think, at one point eschewed because it was just too legacy. It was like old tech, and everybody wanted social media and everything else. But it came roaring back, and it's probably held up as well as any tech stock. Still 1.7, 1.8 trillion in market cap. But you think at this point there'd be a better entry point when, Paul? Sometime in the next 6 months?
Yeah, I think so. Once we start to get through, do we have a recession? If we have a recession, how long does it last? Is it deep or shallow? Still to be determined. And of course, a big part of their business, 27% of their revenues last quarter were PC OEM related. And of course, before COVID, that was a mature, low margin business. They got a COVID bump when everybody worked remotely. And unfortunately, now we're seeing the aftermath of that. And even though Azure and cloud is very exciting, you got a PC OEM business, Joe, that is growing no longer, and probably at least through the next year or so will decrease revenue each and every quarter, double-digit percentage.
So what if you were Satya Nadella, how would you prepare for the future? Where would you go? Where would you be investing? How would you be positioning Microsoft for the better days?
I think they're doing all the right things. Obviously, the company has done extraordinarily well under Satya Nadella, and it had done actually very poorly under Steve Ballmer for a decade before that. Now, I do think one of the highlights, Joe, is this big investment, actually their third round in OpenAI. I don't know what's going to happen over at Facebook with a metaverse, but I know OpenAI is going to be a big deal, and that's a smart investment. The other thing that'll actually be helpful to Microsoft going forward is they were hurt badly by the strength in the US dollar, and now that's going the other way. So there are a couple of reasons to be a little bit more optimistic. But your question about when to buy it, I buy this thing tactically at about $220 a share. It looks like it's going to open $235 or so. And last night during the conference call, at one point, it was up to $245. But like you said in the lead-in, people were relieved that the quarter just reported wasn't so bad, but then they were disappointed in the guidance.
So, I mean, gaming is a metaverse play, isn't it?
Yeah, I think that'll be interesting, and they continue to do pretty well there. But the problem is they're dependent on this Activision deal, and I think the government has said that ain't happening. And so they will do the best they can, but I don't think the Activision deal will ever be approved by the feds.